Big news out of Washington today. Former President Donald Trump is pushing for a massive shift in U.S. monetary policy if re-elected in 2025. We're talking about deep rate cuts, something that could flip the Federal Reserve's course upside down. Is this the end of independent monetary policy in America, or is it the start of an economic revolution? Stay with us, because what you're about to hear could change everything about your money, investments, and the global markets. Donald Trump has openly said that if he returns to office, he wants the Federal Reserve to cut interest rates aggressively, possibly down to 1% or even lower. The goal: stimulate growth, boost borrowing, and reduce the burden of national debt repayments. But here's the twist: Trump isn't just requesting rate cuts. He's making it clear that he would only appoint Fed officials who agree with his agenda. That means the Fed's independence, something central to U.S. economic credibility, could be in serious danger. The current interest rate is around 5.25%, a level set to fight inflation. Cutting rates drastically could lead to short-term economic boost, cheaper loans and mortgages, higher stock market activity. But it could also risk higher inflation, weakening the US dollar, spooking global investors. Economists are split. Some argue this is what the US needs to recover. Others warn it could bring back 1970s-style inflation chaos. Traditionally, the Federal Reserve operates independently, free from political control. Trump's comments suggest a pivot to more centralized control over monetary policy, which hasn't happened in modern US history. If elected, Trump could replace key Fed members, and even remove Jerome Powell, something that could lead to historic changes in how interest rates are handled. Investors around the world are watching closely. A US pivot to low rates would increase money flows to riskier assets, lower returns on US bonds, put pressure on other central banks to follow. This move could also inflate asset bubbles, especially in housing and tech stocks. Meanwhile, countries holding US debt might start to worry about returns impacting America's long-term borrowing power. As an investor or business owner, here's what you need to consider. 1. Diversify your portfolio. 2. Prepare for potential inflation swings. 3. Stay updated on Fed policy announcements. 4. Watch how the bond and housing markets react. This isn't just politics. This is your money, your future, and your financial strategy. So, will Trump's plan supercharge the economy or sink it under inflation? Only time will tell. But one thing is clear. If this pivot happens, it could redefine America's economy for a generation. Let us know in the comments. Do you support Trump's call for aggressive rate cuts? Or do you believe the Fed must stay independent, no matter who's in charge? Don't forget to like, subscribe, and hit the bell icon so you never miss our deep dives into global finance and politics.